All right, so last that we left off is we just um, recorded our bill for our credit card statement. So let's see what else is next, okay? So here, this is what we did. We end up retrieving our bank statement from mainbankofnevada.com. And here is my bank statement. So let me go ahead and just shrink the screen real quick. There you go. So this is what I got the statement from. It says right here that my statement balance was 21,625. Yeah, that's what we started out with the bank with, right, as of June 4th. Right here, it calculated the total deposits I've made and the total credits I've made. Okay, here's my billing number and my statement date. Okay, and then here's my ending balance in my bank account. Okay. It says that we currently have, as of June 30th of 2020, that we have exactly $3,893.87. Okay, right? Because again, we talked about this, right? When you write a check, it can take up to 2 to 3, 4, but 5 business days to clear. Okay, and bank deposits, depending on when you deposit it, during what kind of day, and what time too, right? If you turn it in, let's say on a Monday at 12 o'clock, it will clear the very next day. If you do it at, let's say 3 o'clock, no, let's say 6 o'clock on a Tuesday, it will not clear until Thursday, because it will take Wednesday to process, and Thursday will clear. So again, the bank has its own system to update the amount of cash that you are actually depositing, and so on and so forth. Okay, now again, we have to understand that this right here tells us at as of June 30th, which is a Sunday. Okay, keep that in mind. We also have to take in effective weekends as well. So in this case, right now, as of Sunday, June 30th, you currently only have $3,893.97. So this is the account activity that we see here. So we see that we got a service charge of $100. Okay, and of course we don't have any credit card or interest or any accounts receivable that are connected on to the bank. So again, we don't collect any interest from there. And here's the account activity. So it gives us a track record of when your transactions cleared. So in this case, right, we wrote a bunch of checks. I'm not going to list through all of them, but in this case, right, it actually gives me a date of when the transaction has cleared, right, for what amount, and again, it gives you your account balance. So as you can see, this is the online bank statement, not the one that you normally get through the mail, because the mail will give you something different, right? So in this case, this gives me my account activity, and that's page 1, and here's page 2. So now it tells me that at the end, on the 29th, right, this is where it stopped, and I currently have $3,993.87. Now, don't forget, the bank is going to charge you that $100 service charge automatically without even letting you know, and they automatically will update that into your account. So that's something that your checking account does not have. So in this case, right, what do we do when we receive a bank statement? We need to complete our bank reconciliation. All right, so what do we need? Well, we have our bank statement right here. We will be needing our check register, okay? And you'll be needing your deposit slips, okay? As well as your checking account balance. So in this case, you need your ledger as well under your checking account to ensure that you have everything correct here. Now in this case, we did a really good job of transferring from our journal to our ledger to our account balances. So in this case, this is all correct. There's no mistakes here. Only thing that we actually truly need is your ending balance. So in this case, as of June 30th, right, under our books, we recorded that we should have at least $10,000 $885.17. Okay? All right? So that's all we need our ledger for. It's just to get that account balance, because now we're going to compare our account balance and compare it to our bank balance, and we need to find some kind of common ground to make sure so we know which number to balance off when we start our next accounting cycle. Okay? So again, I have here, right, your bank reconciliation. Right here, your bank reconciliation. So let's go ahead and take the time to go ahead and fill this out if you'd like, and be able to see which ones have cleared, what account balances are what. So in this case, starting with our cash ledger, right? We know that we should have $10,805.17, right? That's what we know, right? And then on our bank side, how much do we actually have? It says here on our bank statement, right here, that we have $3,895.87. So $38.93.87. Okay, $38.93.87. That is what we have currently in my bank account. So again, if you remember our how to do the bank reconciliation, what do we need to do? Let's do the bank side first. Okay? Well, you could do let's do the bank side first, okay? What do I need to add to my bank account?
You need to check your deposits to make sure which ones have cleared and add any of them that haven't.
Okay, so there you go. We're going to go ahead and confirm how many deposits have cleared. Now, in this case, how many deposits have I recorded in my books?
15.
You recorded 15. So let's take a look at my statement here, right? I have deposit number 1, deposit number 2, and then here's 3, here's 4, here's 5, then here's 6, here's 7, here's 8, here's 9, okay, here's 11, so we're missing 10. Oh, nope, 10's down here, okay, and 12, and that's it. So how many have not yet cleared? 3, 13, 14, and 15. So therefore, I'm going to go ahead and put that in here, okay, that I have deposit number 13, deposit number 14, and deposit number 15. Now let's go ahead and add those values up together. So in this case, deposit 13 was $3,172.70. What was my deposit 14?
$38,12.79. And 15 is $27.69.06.
Okay, so in this case, how much grand total deposits?
Is $9,754.55.
Okay, that's exactly what I got too. Okay. All right, so then now let's take a look at outstanding checks, right? Excuse me, I just gave you the answer. Next one, what do we need to subtract out? Our outstanding checks. So in this case, your check register is what you need to see to compare, right? How many checks have you written now? Now, in this case, because we wrote our checks in number order, right? We wrote checks from 1 all the way to 35. Okay, so we wrote 35 checks. Okay, and do not forget, we have a voided check right here for check number 6. Okay, so that's why we don't have that check number, because it's been voided. So let's go ahead and take a look and identify which check numbers have cleared and which one has not yet. Okay, so in this case, right, we're just looking for check numbers. So we got check number 1501, 2, 3, 4, 5, 6 is missing. 7, we know why 6 is missing. 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. We have 18, 19. Okay. Then we have 20, 21, 22. Then we skip 24 to 25. 23 is here. 24 is here. 26 is here. 27 is here. And then it skips to 32 and 33. So we're missing We're missing 28, 29, 30, 31. We have 32, 33, and we're missing 34 and 35. Okay? So, let's go ahead and count that in here. So 15, 29, 28, we're missing 28, 15, 29, 15, 30, 15, 31, 15, 34, and 15, 35. Okay, so let's see. What are those check numbers? What's 15, 28? So let's see. Check your check register. So what was the amount for check number 1528?
$62.50.
What about check number 29?
$358.87
Check number 30
is $667.92.
and check number
31 is $1230.37. And 34 is $481.09. 35 is $62.50.
Okay. Now, in this case, we obviously know if you wrote the check on Saturday, there's no, even if you mail it out, Sunday there's no postal. So therefore, whoever you mailed it out to won't receive until Monday, right? And if they receive it till Monday, it won't clear till the following Tuesday or Wednesday. So therefore, you're out of the range of June. You're in July territory. So in this case, that's exactly why those things didn't clear. Now, what about the other ones that you have written out on the 27 and 28? Well, once again, if you wrote it on the 28, 28 is Friday, right? Now, if you remember what check 1530 and check 1531 are, right? For 667 and $1,230.37, those probably are my employees. If they use their check system, which is like they take a picture using their phone, it's still in transit. If they try to cash it out on the Friday, right, it probably won't clear until very late or early Monday morning. Okay? So in that case, that's probably the reasons why those checks are stuck in transit. And of course, the other ones, right, you mail them out. They, depending on the weekend, it might not get there, or they do get there, they deposit over the weekend. It's not going to clear until the next following business day on Monday. So in this case, those are the, maybe fair reasons why these checks have not cleared yet. So let's go ahead and give me an indicator. What's my grand total of checks?
$2863.25.
Okay. So therefore, let's go ahead and do the math. If I started out with $3,893.87, and I'm at nine, and I have to add in the deposits of $9,754.55, and I wrote a bunch of checks that have yet to be cleared for $2,863.25. How much is my ending adjusted balance?
$10,785.17.
85?
That's what I've got on here. Let me add it again. Let's see. $10,785.17.
Okay. All right. So then, oh, yeah, sorry. That's right. Okay. Anyways, so then let's go ahead and do my cash side, right? On my ledger side, what do I need to add?
There's nothing that we need to add on to it because there was no interest.
No interest collected. Good. But what do I have to be subject to have to pay?
You've got a bank fee of $100.
Yes, you do. Service charge of $100. So you need to subtract $100. So what that's going to give you? And that balances, right?
Yep.
10, 7, 8, 5, 17. Good. So there you go. That's how you do a bank reconciliation here, right? This one's a straightforward, simple one. No mistakes were really made. But I've also attached down below here in case you needed those numbers to locate what you're looking for. In this case, these are ones that have been submitted, but again, they're in transit. So I left that part out because I wanted to you guys to figure it out how to be able to do the bank reconciliation on your own. Okay. Awesome. So now that we have figured out what my bank should be, right? What is our way to adjust my bank account? Because right now I'm currently at 10,885.17. How do I adjust my bank account so it matches my bank account at Maine Bank of Nevada?
We need to credit the checking account for the $100 service fee.
Exactly. So let's go ahead and do that in my journal. Okay. Now in this case, what am I paying for?
Bank fees.
You're paying for a bank fee. Okay. So in this case, bank fees is going to be account number 6100. Okay, so that's exactly what we're doing. We're incurring some bank fees, okay? And we are paying it through our checking account. Now, do we need to write a check?
No.
No. Why not?
Because it's not going anywhere. It's coming out of the account ledger that we have. It's already out of the bank account.
Exactly. The bank already charged you the money, so you don't even need to do anything except for adjust your bank account. So in this case, the bank already charged you that money without consulting you, without letting you know, because again, that was the agreement terms of using the bank account to do business, right? So this is something they probably talked to you ahead of time, and that you need to know that every month you're going to be charged a service charge for managing your money and so on and so forth. Okay. All right. So then my description here is going to be bank reconciliation, service charge. Okay. And of course, I forgot to put the who charged you the service charge. Okay, Maine Bank of Nevada. So now that I completed my journal, I need to go ahead and update my ledger so my checking account reflects what my bank should appear the following next accounting cycle. Okay? So starting with your bank fees here, we finally got charged for service charges. Which cost you $100. And it's automatically taken out from your checking account as of June 30th. Okay, so now you're at 10, 7, 8, 5, 17. Good. Okay. Do you need to go to the subsidiary ledger for this? It is optional. Do you need to report that you got charged $100? In this case, there's no track record of it except for, that's the price of doing business with the bank. You can put it on your records, but at the end of the day, what purpose does it serve? It's one of those charges that are unavoidable, and there's no track record that you need to do because you're not going to use your bank statement to represent that you got charged this money, right? It got taken out of your bank account regardless. You didn't write a check, but if that's something that you want to record, you can go ahead and record. But again, you don't absolutely need to because, again, the reason for subsidiary ledger is if you owe people money. I don't really owe the bank anything because they already took the money out. Right? Now, if they charge me, for instance, interest, then yes. If, for instance, remember the whole agreement when I had a line of credit? In this case, my bank statement says that I did not overdraft at all. Okay, so let's take a look at my bank statement again. So again, because the purpose of writing out your checks, they don't clear until maybe a couple to 4 to 5 days later, right? So in this case, every single transaction that we've done so far, you were okay. You didn't drop below, but you did get close here to 475 because you had to pay a bunch of vendors, right? And all you did was pay. And then when we started depositing our money, that's when we actually started getting income and actually control of our flow. Now, what happened when we actually submitted that $6,000 check that we wrote to pay for the tables and chairs? This is what it did. It dropped us down to $722. So again, we still had the money because we kept depositing money every single day after our in-store transactions, which usually cash is instant. You go to the ATM, you put it in your checking account, it should clear the next day. So that's the beauty about ATMs and banks and things like that, right? If it's cash, it should go into your checking account instantly. If it's a check, that will process and take 2 to 3, 4 business days, depending on if that other person has the money in their bank account for them to transfer the money over. So that one takes a little longer. All right. So that's why these checks, when you write them out, you got to mail them. The person has to receive them. They have to put it in their bank. It takes 2 to 3 days to process. So again, whatever we recorded in our ledger isn't accurate because, again, we have the idea that every check that we write has that processing time. Okay? But another thing that we want to do is when you are using the ledger, that's going to give you at least the most accurate amount of money that you for surely know that you have. Because if you are very concerned about spending every dime and you're relying on just because you cut a check for $6,000, that does and it hasn't been taken out of your bank account, you say, "Oh, I still have $6,000 I can spend." No, that's mistake number one. And thinking that you do have the money when you don't know when that check is being cashed out. So that's also where oftentimes you end up getting that overdraft. That overdraft problem is because you think you have the money, even though when you check your bank statement and nothing's being cleared, even though you wrote the check out, the fact that you are relying on not keeping a really good track record by saying, "Oh, I wrote the check out, but I still have the money in my bank," that's where, again, your business decisions are not very good because you're still spending more than what you actually have. So again, there you go. Bank reconciliation is complete. So, again, if you want to, you don't have to for a bank service charge. There's no need to record that in your subsidiary ledger unless you want to. Again, the account's going to be zero anyway because you already paid it off because the bank already charged you. So at that point, you'll be recording basically a blank transaction. Okay. All right, so let's see. I think we have some time here to just do this last transaction and then we'll go ahead and call it a day. So now it says here, now we received a bill from the bank for the truck loan. Okay, so here you go. Okay, so the truck loan, here's your billing number 1198463. You have a grand total of the statement date here for $29,221.90. The amount of interest that you were charged was 3% of interest that was compounded every month. So in this case, you owe $73.05. And again, so now your total current balance is $29,294.95. And now this time you have a number of payments left due. So right here, you have a number of 36 payments left that are due, and it's due by the 20th of July, and this is your payment that you have to pay. So in this case, this is different than actually receiving a bill for what you owe. In this case, you borrowed money and you're paying it back. Huge difference. Now you may not see it on the person who's receiving this bill, right? It may not look any different to you, but in this case, I'll tell you what's different. If you're going to borrow a loan, they've already calculated the interest ahead of time. So in this case, they give you the time frame of 36 payments, right? Meaning 3 years. The interest is 3%. They've already calculated what 3% interest is in grand total for the 3 years, and they attached it to your loan, and that's why they crunched this number for you to tell you what your minimum payment is per month. And if you pay this $849.81 every single month for 36 months, you will end up paying your principal of 29,221.90 plus the interest that was already accrued. So in this case, that's the dangers of making a loan is they already have accrued the interest for you already and they're making you pay it through your minimum payment. So that's why every time you do pay a loan, you always pay the interest first. Okay? And then slowly, eventually, whatever leftover money that you have will go towards your principal. That's why oftentimes when you try to pay off a loan, you never see the number go down if you're just paying the minimum payment every single time. Okay? Little review there. So, since I received a bill and I'm obviously not going to pay it now, I'm not going to pay $849.81 yet. I have 20 days to go ahead and pay it. So, in this case, I can take my time to make this payment. So, again, I am recording another bill. So, how do I record this bill this time? Did we learn from the previous one? So how should you record this bill?
Well, we can copy from the Visa payable.
No. Well, you can copy the structure.
Yeah,
Yes.
structure. Yes, I meant structure.
Okay. All right. Where
I think you went too far.
yeah, sorry. We only did 2 transactions so far, so all right, here it is. Now, instead of a Visa payable, what are we actually paying?
I think it's, let me find out the name of the account. I think it's some kind of loan it calls. It said a truck loan.
What do you mean instead of truck loan?
Oh, no, instead of the Visa payable, it's.
Oh, okay, got it. Okay,
Yeah,
it's
called
truck
a
loan.
truck loan.
Yes, truck loan for account number 2820. Whoops. Truck loan 2820. Okay. Now in this case, right? If this main Bank of Nevada that gave you the loan, right? They already gave you what your payment amount is. So, can you pay more than what is on the amount? Yes, you can. But in this case, they already kind of pan it out for you saying this is your monthly payment. So you have to pay this exact amount. So what do you do if you have to pay this exact amount?
You can go ahead and put it in for $849.81 because personally, I wouldn't separate out interest because of the way that they do their it's an amortized thing. So what would you do? Would you take the interest out separate?
Yes, you would. Now, in this case, is $849 actually going to go to your actual truck loan? What was the rule of thumb when you pay these loan sharks?
Okay. Because, see, I wouldn't have thought to do that.
Okay, but that's the rule of thumb here. No matter what kind of payment that you make, you always pay.
Always, if it tells you what the interest is, you need to take it separate.
Yes. So in this case, my truck loan will definitely not be for $849.81. That's the amount that I need to pay. But what gets covered first?
Okay, so what you do then is put in your interest amount, the 7305, and then for the truck loan, you would subtract the 7305 from the 849.81.
Oops. 84981 minus this
This
amount.
is five, yeah.
That's
And then
correct.
you do the same down on the bottom. The accounts payable would be the 776, 76 thing. Oh, okay. All
Yes.
right.
That is correct. Why? Because we talked about this, right? Especially when you make a payment to a loan, you always pay your interest first. And whatever
And
dollar that you pay over your interest, so usually whatever they get charged that month is, so for instance the $79, right? That's how much interest they charge you for that month. Now again, imagine this, 7305 for a span of 36 years. How much interest are you actually paying this bank loan, this bank lender? A
yeah, it's a
lot.
lot.
So that's why the price that they tell you, the payment that they tell you, already includes you covering not only the interest, but it also allows you to also pay, obviously, your loan off. Now, here's something that you also need to know too. If you want to, you can choose to make a second payment, okay? And you can tell the bank, because you already made the first payment, you already paid the interest, your second payment can purely go straight to your principal. Yes, that is allowed. So instead of doubling up on your interest payments, you're actually paying your interest one time, and then you're doubling up on the principal payment so you can pay off the loan quicker, and you would, reduce the chances of you getting your interest collected. But again, they already included it into the price of the loan anyway. So the longer that you have it, the more interest you'll be collecting. Okay, the less that you have it, it's not necessarily less interest, but it is less interest. It's just less between the time span that you have it for. So again, if you could pay it off in 2 years, then you would reduce the risk of getting that $73 interest for that year. Yes, month. Yes.
So since you mentioned it, when I make an extra payment on those car loans and such, I just write one check, and then whatever the difference after the monthly due, they just apply to the principal. That's the agreement I had.
Mm-hmm.
So you said, okay, we make this payment, and then if we want to make the second payment, just simply having it apply to the principal,
Mm-hmm.
um, we will make a separate entry,
Mm-hmm.
right?
Mm-hmm.
But if in my case, I'm just when I decided to pay the bill, um, when it's due,
Mm-hmm.
and then just write one check with the additional money in it,
Mm-hmm.
do I still have to put two separate entries?
No, because you know why? You're paying
Okay.
above the minimum. You're
Okay.
paying more than what they ask you. So, of
Yeah.
course, any extra dollar, once you cover the interest, every other
Uh-huh.
dollar is going to go straight to the principal. That's the
Yeah.
rule. So, in
Yeah.
this case, you're making a payment over the minimum. I'm talking about making the payment on the minimum, because that's just the requirement that they said. Because if you make a payment of $849 every single month for 36 months, you will eventually pay off your loan. But in this
Yeah.
case, that's not what we want. We want to also pay off our loan a lot quicker so we
Yeah.
don't pay the tax or pay the
Yeah.
interest, right?
Mm-hmm.
But in this case, right, they already charge you the interest regardless.
Yes.
So even if you chose to pay more,
Mm-hmm.
you're just paying it off sooner, but you're still paying the interest because they already calculated it. That's why they
Yeah.
gave you that minimum payment.
Okay.
So it doesn't matter what you do, you already are paid into that accrued interest already.
Okay.
Mm-hmm. So that's the huge difference between a loan and borrowing a credit card, right? A credit card is interest collected based on how much you spend.
Yes.
This one, they already charged the interest regardless. Just
Because in there,
because,
I
yeah,
we
because
already spent the money.
exactly. And second two is that was the agreement saying,
Yeah.
hey, if I let you borrow this money, I'm going to charge you additional X amount of interest on top of that. So
Okay.
that's just, again, that's the price of borrowing money from a bank, right? So there you go. Yes. So this is what you would do, and then when you pay, you pay. You pay. You're gonna pay the truck and the or you're gonna pay the accounts payable, and you're gonna pay the interest payable on top of that, right? All right. So yes. So in this case, again, you pay the interest first, and then whatever amount that is in excess for that the payment amount goes towards your principal. So in this case, I'm actually only paying $776 towards my actual principal. Okay. So I go ahead and I'm going to go ahead and put in my note here. This is for the Maine Bank of Nevada, once again, because they are the one who gave us the bank loan for the truck. Truck loan bill number 1198463. Okay. And of course, you could say it's due in 20 days or net 20th, since this is a date-driven date. Okay. That means that it's due on the 20th of every single month. Okay. All right. So now let's go ahead and plug our numbers into my ledger. So I have a truck loan to take out from. Right here, I'm already at the bottom. So here's my truck loan. So because if I'm making my payment, okay, so I can put my bill number here, or I could say payment, or whatever it is that makes sense to you. So bill number 1198463. Okay. General Journal 23 still. And I'm going to debit my account for $776.76. Okay? So then that will reduce your truck loan by how much? It will decrease it to $28,445.14. Okay? Next, we have interest expense. So interest expense. Here you go. Interest expense right here. Oh, that's freight expense. Insurance, interest right here. So $630. Okay, this time you could say this is for your truck loan. Truck loan, 3% interest. Okay, if you want to put the bill number, 1198463. Okay. General Journal 23 for $73.05. Right? This is what you paid extra for the cost of owning a truck. Okay, which is part of the operations of a business, right? You need the truck, you have a loan to pay, so this is the cost extra on top of that. So you owe now a total of, or you've paid in this case, or owe in this case, a total of $105.40 to interest. Okay. And of course, you're going to update. Okay, so in this case, I'm interest expense is right here, or interest payable. I'm just going to go ahead and fill this one in. So interest payable for June 30th, right? Same thing, truck loan. bill number 1198463. General Journal 23, and this time for the same amount of the $73.05. Okay, so again, this is where you're gonna say that you owe that $105.40. Okay. And last but not least, you need to put it under your accounts payable because that's going to be where you're transferring that money to. So therefore, you're going to increase it by $776.76, which will bring you to a grand total of $9,664.81. Okay. Last but not least, you're going to need to update your subsidiary ledger under Maine Bank of Nevada because they are the people who not only do you do banking with, but you have a truck loan through. So again, Maine Bank of Nevada. In this case, I'm going to insert it as a separate one because it's June 30 now and you actually received a bill. Okay, so again, you can go ahead and say truck loan with interest 3%, which equal the $73.05. Okay. Bill number 1198463. General Journal 23. Due on the 20th. Okay, so therefore it's due July 20th. For the amount of, again, right now you already have your loan in here. So you already have the amount here that's being, owed to, right? So in this case, all I'm going to do is just add my interest for $73.05 because I already recorded that I have the loan in here. I'm going to record now that I got interest from this bill. So therefore, if I do my calculations correctly, I now owe a grand total of $29,294.95 until the day I make a payment, which will take out the interest automatically, right? In this case, I borrowed the loan, okay? Where the other one, I don't know how much I owe on my credit card. That's something that I find out through my bill, okay? So that's different. One of them, you don't know what the set number is. This one, you do have a set number. That's why it's already in here, okay? All I have to do is update what that loan charged me interest on top of. So then when I do make a payment, I pay off both the loan and the interest. Okay. All right. So that concludes today. So we will come back and we will finish up the rest of our adjustments here. So again, we like I mentioned today, we weren't going to go into depreciation because tomorrow we will. So, all right, any questions in regards to the adjustments that we have made today? All right.